This BizNews Briefing is brought to you by Investec Business Banking. Make the move from business as usual to Investec Business Banking.
It's the 24th of March. This is your BizNews Briefing. I'm Bronwyn Nielsen. Today, we pull focus on South Africa's participation in the Africa Growth and Opportunity Act. It's no secret that South Africa is pursuing other investment markets, especially as its participation in AGOA hangs in the balance. This was confirmed by Cyril Ramaphosa in a recent Q&A session in National Assembly.
And as you know, China has become our biggest trading partner, and we want to sell more. And President Xi Jinping has been saying to us, we want to buy more goods from South Africa. And indeed, various other leaders in the Middle East have been saying precisely that. But we want to continue trading with the United States because we sell minerals, we sell vehicles, we sell agricultural products to them. So we do not take the opportunity that we have, as it is called, Africa Growth Opportunity Initiative. We don't take that opportunity lightly. But at the same time, we want to also demonstrate that, yes, we have value to add. As you may want to know, when I spoke to President Trump, when he was president-elect, congratulating him, I informed him that we value participating in AGOA, but I also informed him that we also sell critical minerals to the United States, and the relationship is fairly balanced. So many workers benefit from our AGOA participation, but at the same time, many other American workers also benefit from what we sell to AGOA. So it is balanced, and we want to see that balance and the mutual benefit carrying on into the future.
In a press briefing last week, Citi's South African economist and head of research, Gina Schoeman, said it's Citi's position that South Africa should exit AGOA before it is asked to leave. She added that the impact, in their opinion, wouldn't be significant, as AGOA contributes just under 0.1% to South Africa's GDP, but she did caution on the impact of South Africa's automotive sector.
South Africa is one of 35 member countries of AGOA, and South Africa has been a part of AGOA for a very long time. Our calculations, our analysis, in context of the current rising US-South Africa tensions, means that our baseline view is now that South Africa will no longer be a part of AGOA after 2025. AGOA officially expires at the end of September this year, but we believe that it would be in South Africa's best interest to exit AGOA beforehand, or even on that date, in the event that the US has not already asked South Africa to leave or kicked it out. Now, the question to ask is AGOA a big deal for South Africa? From the top-down perspective, so the macro perspective, AGOA exports from South Africa to the US come to less than 0.1% of GDP. That is directly. Naturally, indirectly, you could add a few more percentage points, but you could already see that the impact of no longer having the benefit of AGOA in our exports is not significant. In other words, it will not cause the economy to fall down. Where it does have a negative implication is when you look at it from a bottom-up perspective. In other words, who exactly benefits from AGOA? And here you see that it is highly concentrated to the transport or automotive industry, and particularly to only two or a few car manufacturers. Now, for these companies, it would be more significant. And you can also add in the agricultural sector to a degree. There are small players in the agriculture sector where you do see some concentration of benefits from AGOA exports. But put together, From a top-down macro, overall economic perspective, the AGOA benefit is not very significant. Why does South Africa remained in AGOA all these years when it actually could have exited, given that it had matured from it, is because under a non-GNU government, under state capture, the Zuma years, under an ANC government that Cyril Ramaphosa was trying to bring together, the optics of trading with the US and affirming good US-South Africa relations was obviously something South Africa wanted to retain. Now, however, with the backdrop of a Trump administration and the rising US-South Africa tensions, AGOA really is even more difficult to see how AGOA can serve this country in a very positive manner. We would, as a baseline view, suggest that South Africa is going to be removed or opt out of AGOA this year in 2025. But what we would prefer to see is that if South Africa exits AGOA, it exits on a lapse of some sort. In other words, South Africa gets told or tells the US that it is no longer going to be part of AGOA. However, they negotiate so that South Africa only actually loses AGOA status in a year's time, hypothetically speaking, just to give the country a period of time for those more bottom-up companies and sectors to try and make alternative trade channels, renegotiate bilateral trade agreements with the US and any other country in order to not have that bottom-up or more micro negative impact from AGOA.
Sarkolige's chief economist and executive director Russell Lamberti says the essence of great diplomatic relations is to be friends with everyone. Let's take a listen.
We are a very small economy in this big global ocean, and so it's not like we make up a large portion of trade or anything like that. But in terms of things like AGOA itself is an overestimated kind of risk. It covers a not very large portion of trade. The adjustments there on tariffs, when you break it down into the final sort of analysis, it's maybe single-digit billions of rands. That's nothing to be sneezed at, but in an economy that's 7 trillion rand, it starts to kind of put something like AGOA into perspective, Bronwyn. So that's an important thing to say first and foremost. So I don't think that we need to see US trade disappearing. Potentially that we see a bit more friction in South Africa US sort of bilateral trade, and that's something to be concerned about. Particularly, I mean, I think AGOA is perhaps less important than the threat of kind of blanket significant tariffs across all trade flows between South Africa and the United States. I think that's far more concerning. Is it easy just to pivot to other countries? I mean, remember, trade relations are established business connections. There's kind of cultural compatibility. English and South Africa and the United States, both English-speaking territories. So it's not easy just to kind of flick the switch off and on again when it comes to global trade. There's big economies out there, but losing good trade flows with the United States is very significant, and certainly not something that you can just kind of pivot. This idea that, well, there's this thing called BRICS, and if America doesn't work, then we sort of turn to BRICS. That's a very shallow analysis of how trade and international relations work. And I'll just make a quick point. A country like India does this so well. India is part of BRICS. It's a good friend of the United States. It manages good relations with its Middle Eastern kind of counterparts. It has traded with Russia, I believe, through this whole period. It's kind of managing relations with China. So they seem to be adopting what I would call mature diplomacy, mature international relations. That's got to be the direction we move in.
One more question is on manufactured goods, exporting manufactured goods versus exporting raw materials. There is the perception that we are more focused on raw materials insofar as our relationship with China and that the manufactured goods flow to the US. Is that appropriate thinking?
Well, we do send quite a lot of raw mineral goods to the United States. And, again, I think people like to think of trade in these fairly simple narratives. Yes, China needs resources. There's actually nothing wrong with selling resources to someone if you are good at producing resources. South Africa's actually become less efficient at producing resources, but if you do, that's actually fine. There's this idea of beneficiation. You should actually be manufacturing because then you get more for what you sell. But if you're not efficient at manufacturing it, then it just costs you a hell of a lot to make those things that you're trying to sell. So we need to stick. South Africa needs to stick to strengths. Businesses need to sell to as many markets as possible. We need to send raw materials to the US, to China, which we do. We need to send manufactured goods to the US, probably, to China, probably less so to China because they're very competitive in their local market. But I mean, I think, again, it's just this more, we need to have a more mature perspective on what trade is. It's not so much something that gets directed by governments. It's a business-orientated process. Businesses find other businesses to trade with in other countries. And we've got to let that process happen organically and give it as much space as possible to flourish.
In the world of business banking, the bottom line can often triumph over relationships. At Investec, we value both. Make the move from business as usual to Investec Business Banking. Out of the ordinary.
At Sun Exchange, we make going solar simple, profitable, and completely risk-free. Join over 100 satisfied South African customers already enjoying the benefits of risk-free solar. Start saving today. Visit sunexchange.com and join the solar revolution.
Turning our attention to business, one of the speakers at the BizNews Conference 7 in Hermanus 2 weeks ago was van der Walt, the CEO of WeBuyCars, remembering that WeBuyCars listed on the Johannesburg Stock Exchange on the 11th of April 2024. The opening price on the day of listing was 20 Rand. The stock is currently trading above 40 Rand with a market capitalization of just under 18 billion Rand. Let's take a listen to this snippet from van der Walt's speech at the BizNews Conference 7.
When I was a teenager, and I'm sure it's the same with you, you often wonder what your future holds for you. I remember myself thinking, I wish I could speak to the 30-year-old Fawn, or maybe just have 2 minutes with the 40-year-old Fawn, or the 50-year-old Fawn. And ever so often you catch yourself dreaming and thinking, where are you going to be? But in my wildest dreams, I was hoping to have a nice job, have a decent house, that sort of thing. If that teenager could see me now, you would not have believed it. So we've been extremely privileged. Lots of entrepreneurs call it luck. I think there's definitely an element of luck involved with this. And that recently we had a conference nearly as big as in this big tent. We had 450 buyers across South Africa come together. WeBuyCars buyers. And with Dirk and myself being the very first 2 buyers of WeBuyCars, having started the business 25 years ago, it was quite a moment to, for the first time in a very long time, to get everyone together in one space. We were sitting on the Oppie Verhoog, and I took a picture of that. And I told John, a colleague of mine, look at this picture, and he says, it gives him chicken pox. What he meant to say was it gives him goosebumps, but hoendervleis and chicken pox. So we've had quite a few of these chicken pox moments along the way where you could pinch yourself and say, is this real? Sometimes you walk into the Dome and you look at all these cars and it just doesn't seem real. So yeah, the story is to explain to you how two guys who started a business in their backyard with two cars ended up, no, sorry, let me rephrase that, and definitely not ended up. This is a milestone. Today is a milestone on our journey. We know we're nearly done. We have big plans for WeBuyCars going ahead. Yeah, so this is a moment where you stand still, you look back, and we're going to obviously move forward again. But how we moved from starting in our backyards with two cars, very little money, to where we are today with 16 huge warehouses across South Africa, housing more than 14,000 cars. It's a story of how we started with 100,000 Rand and grew a business where the market cap today is sitting at around 18 billion Rand. It's how we spent 20,000 Rand a month on marketing in those first years, which was a lot to us. 20,000 Rand on marketing like that, which was in the Beeld newspaper. You had to pay, like, I think 500 Rand a day to have that on page 2, to where today we're getting closer and closer to spending 1 million Rand a day on marketing.
You can catch that full speech by Van der Walt, the CEO of WeBuyCars, on BizNews TV on the YouTube channel. Now, another speaker at BizNews 7 conference was Sean Peche, the founder of Randmore Fund, which, according to Morningstar, is one of the best performing global equity funds since inception in 2008. Sean feels that all is not well in the US, and he gave us a little insight into his thinking in this regard, as well as insight into Tesla's performance, which is down 50% since the US inauguration of President Trump.
Trump pouring money about to set fire to the dollar. I mean, he is out there making enemies with his closest neighbors, and on a daily basis. You know, you've seen the news. You know, tariffs are on, tariffs are off. It's hard to keep up. And those are, he's imposing tariffs with his neighbors, America's neighbors and closest allies. And I mean, you know, I think he'd been inaugurated for a week, and he'd alienated the Canadians, the Chinese, the Danish, the rest of Europe. You know, so and South Africa in not a long time. So foreign and international investors have now got a reason to sell. All right. The second thing is the popularity. I mean, that's the popularity. With what Canadians, their perspective, and how many think that the Americans are their friend. It's down to 24%. But this is a YouTube YouGov poll, and you can see a whole lot of countries where they're less favorable views to North America. That was in Feb. That was before the White House and how Trump treated you, President Zelensky, etc. I mean, I hate to think what it's like now. So around the world, people have now got a reason to sell the dollar. Okay. And what have we got here? This is the Tesla share price. It's the market cap. Now, Tesla's down 50% since the post-inauguration benefits. Okay, down 50%. Tesla sales in Europe are cratering. France down 63%, Germany down 60%. There are protests outside Tesla depots and all around the world. I'd be surprised how many. I think it's still going to carry on. You know, those were orders. So the numbers in the next few months are going to be horrific. And Tesla, even after its 50% fall, is still on 105 times earnings. It's the 12th biggest company. If you buy an S&P 500, your 12th biggest company is Tesla, even after that fall. Okay, so prices are in free fall. What does that mean? It means the leasing companies don't know how to value this. So what are they going to do? Well, they go, okay, well, we're either not going to provide finance for a Tesla, or we're going to charge punitive rates because we don't know what this thing's going to be worth in a couple of years' time. And so that's a big company in the S&P 500. You look at companies like Apple, and what's going on in China. It's Buy China. And so Apple's sales are 20%. The 20% of Apple sales are in China. All right, so a lot going on. Another important point I haven't really seen much talked about until this morning, and I went onto Google on my iPhone, and you know how it follows what you like. There was an article in, I think it's Forbes or Fortune, I think it's Forbes, by Ray Dalio talking about this thing. These are the major foreign holders. Sorry, let me just go back here for a second. These are major foreign holders of U.S. Treasury securities, okay? China's the second largest holder of U.S. Treasuries. Canada, I think, is number 6. You got most European countries down there. Now, if the foreign countries don't want to buy U.S. debt, what's that going to mean? It means interest rates are going to go up in the States. What is that going to mean? It means corporate profits are going to be less. So there's lots of uncertainty out there. Who knows how that's going to play out? Depends on inflation, depends on the exposure, etc. But there could easily be, if these trade wars carry on, some ramifications. And how different is that to what we thought, all the people thought, about the state of euphoria when Trump got elected?
On the geopolitical side of things, U.S. officials are meeting with Russia in Riyadh in Saudi Arabia today. That's after they held productive and focused talks with Ukrainian officials yesterday. Our Bloomberg colleagues have more.
The Americans are hoping eventually to get an agreement to extend the existing ceasefire covering energy infrastructure to include the Black Sea, covering shipping there. And that's their main objective for this, as well as to thrash out some of the details of how things like monitoring will take place on the energy infrastructure, for example, and what happens if it's breached.
Yeah, I mean, you say that the goal is to move towards a more comprehensive ceasefire away from just the energy infrastructure. But yet we know, and this is what President Zelensky said yesterday, there have continued to be attacks on civilian infrastructure in Ukraine over the weekend. So it doesn't put us any closer to a full ceasefire, does it?
Yes, that's right. I mean, both presidents agreed to an energy infrastructure ceasefire, and Russia has interpreted this very strictly as targeting energy plants and electricity infrastructure. But it has continued, as the Ukrainian president noted, to bombard Ukrainian cities, and that's going to clearly be an issue going forward as the US tries to achieve a more comprehensive ceasefire.
Yeah. Do we have any signals that Russia is willing to make any concessions on these talks?
No, currently that's one of the interesting aspects of these talks, that the US in particular has been pressuring Ukraine on various aspects of the war, and to try and push it to a position where it will make concessions. It's demanded very little from Russia, and Russia has offered practically nothing.
Yeah, what are the types of concessions do you think the US should be demanding out of Russia then? It should be proactive as opposed to waiting to Russia to put something on the table.
We do have to remember that Russia started this war, and the efforts of the United States now to end this war could be shortcut very quickly if Russia simply withdrew its forces back to the international line. Clearly, Vladimir Putin's not going to do that. So any compromise deal that the US thrashes out is going to involve some loss of Ukrainian territory. Now, there's a big question whether that rewards aggression.
What about Europe's place in all of this? Over the weekend, Steve Witkoff, the Middle East envoy, but of course he's been actively involved in discussions. He sat down with Tucker Carlson, where he sort of dismissed the idea of the coalition of the willing as something that was a mere pipe dream for the Europeans.
Yes,
what do you make of those comments vis-a-vis what Europe are trying to do to shore up Ukraine's defences?
He was very dismissive of that, and particularly of the UK's Prime Minister Keir Starmer's ideas. Essentially, I think the US doesn't have much expectation that Europe will be able to put some kind of force on the ground that would tip the balance in this war. And so it's very much taking the view that Russia has always taken, in fact, that this is a matter for discussion between the US and Russia, and that the two of them will thrash out some agreement that will be presented to the Ukrainians and to Europeans to accept and sign up to.
That brings us to the end of today's BizNews Briefing. We'll be back tomorrow with more context on the global and local front. Thanks as always for watching.
This BizNews Briefing is brought to you by Investec Business Banking. Make the move to private banking service now for your business.